Welcome to On Approach, your go-to podcast for expert insights in general aviation, proudly brought to you by Airmart. Airmart is a family-owned and operated aircraft brokerage that has been serving the aviation industry for over 50 years. We provide everything you need to make buying, leasing, or selling an aircraft simple and rewarding. Visit airmart.com to learn more. Our podcast discusses the latest trends, tips, and industry developments that matter most to pilots, aviation enthusiasts, and industry professionals. So buckle up, tune in, and get ready for a smooth descent into the exciting realm of On Approach.
Welcome today to On Approach, our 9th episode for our podcast for Airmart, Alpha Jets, and AGL. Today, our discussion is going to be about bonus depreciation and how that can help you with your aircraft purchase. So we will be making the most of tax benefits before the end of 2025 with bonus depreciation. Earlier this year, Congress passed what's known as the One Big Beautiful Bill. For business owners, it was a true game changer. The One Big Beautiful Bill permanently restored 100% bonus depreciation, which in short means qualifying equipment, including aircraft, can be fully depreciated the year they are put into service. To help us unpack what that means for your business, we're looking to buy an aircraft in 2025, I'm joined by some experts. Irv Rosen, who's joining us, the sales manager for both Airmart and AGL. Irv brings years of experience in luxury sales, particularly with Mercedes-Benz, and a deep understanding of how high net worth buyers approach major purchases. Welcome, Irv.
Yeah, thanks for having me. I'm excited.
On the other side of the table, we have Tate Priest, Vice President of Jet Sales and Acquisitions at Alpha Jets, who has his finger on the pulse of today's turbine market. Tate, welcome.
Yeah, thank you. Happy to be here for another episode and talking about all the advantages of this new tax bill.
Absolutely. Jets and turboprops, one of our favorites. We also have Louis Pfister, CPA, tax specialist who advises businesses on how to maximize incentives like bonus depreciation and how to save money with tax strategies. Welcome, Louis.
Glad to be here, Grant. Appreciate the opportunity to talk with you all today.
Well, we're glad you're here as well, and all of your expertise that you've had over the many years with your clients. So let's get into it. First question is people want to know, what is depreciation? 100% bonus depreciation. So let's start with the tax expert, Louis Pfister. So if you could exactly explain to us what 100% bonus depreciation is and what this One Big Beautiful Bill did to restore 100% bonus depreciation and how powerful that is for business owners and current aircraft owners and future aircraft owners.
Be happy to, Grant. Give you a little history. The bonus depreciation was in effect. It started out at 100% and has been reducing 20% each year thereafter. This year, I think the bonus depreciation would have been 40%, thanks to this, we call it the OB3 tax bill.
Okay, Star Wars pun there.
Yeah, there we go. Is basically they have restored bonus depreciation back to 100%. So basically that means, for example, an airplane, if you purchase an airplane, new or used, it can qualify for the 100% bonus depreciation for federal income tax purposes. States generally have different rules, but for federal tax, you could write the entire plane off in the year you purchase it and place it in service.
Fascinating. So that's very good. And then also, there's a nice little retroactive kick that they put in there too, right? So if we already sold one of our customers an airplane this year, that was retroactive to what date?
Approximately, I think it was January 29th, if memory serves me correct.
Yep. I think that was when somebody came into office, I think, right? Right around that time. All right. So, Tate, from a market standpoint, how has this shifted buyer urgency in the turbine and jet space?
This is huge. We've seen this in years past and previous years when bonus depreciation was in effect, and you have to place that aircraft into service before the end of the year to be able to take advantage of that in the 2025 tax year. So time is ticking away. We're staring down at Q4, and we're going to start seeing inventory tighten up, more buyers entering the market space, and now is the time to start looking for an aircraft if you want to take advantage of this in the tax year of 2025.
Okay. Sounds like sense of urgency and some economic facts that we all know. When there is a tighter supply, the demand drives what?
Price goes up.
Absolutely.
So if you want to take advantage of that now, we've been doing a lot of transactions here recently. Just sold a King Air B200 solely for the purpose of saving some taxes this year. So those guys got in early. We closed that deal in September, and they're not getting in the rush of year-end buying. So I would strongly advise, if you want to be in that position, to start looking sooner rather than later, because you don't want to be in the market with everybody else in the middle of November.
Okay, sounds good. All right, Irv, in your early conversations with clients, how much weight are they putting on the tax incentives like this when they're making their purchasing decisions?
That's a great question. When you look at it, I think people consider the tax advantages, secondary. The primary thing that in early conversations will mainly go towards, the performance of the aircraft, its history, what panels in it, and is it going to fit their mission? And once we've established an aircraft or two that fits that, then, even though it is a secondary thing people consider, it weighs heavy on the decision and how they end up finalizing the purchase. So when you're looking at it from that standpoint, establishing the aircraft that's going to fit their mission, whether it be a King Air, a Baron, or something along those lines, that side of it, as an aircraft expert, you can really establish that in about a day as far as figuring out what is going to fit their mission the best, and then figuring out, what advantages come to that secondary, may make that decision whether they go with the lower timed engine King Air with better avionics, because it has that more tax advantage. So I definitely think it may be a secondary thing people consider, but it is a heavily weighed option that comes after figuring out what fits their mission the best.
Okay, excellent. All right, so let's think about this now from a standpoint of a buyer's perspective. So again, kind of reiterating things, but from a buyer's perspective, and we'll kick this over to Lewis. There are important IRS requirements to consider. Can you explain the 50% business rule for our prospects out there, and if a buyer doesn't meet those thresholds? So can you kind of give us a thumbnail sketch of what kind of guardrails the IRS puts on using an airplane for bonus depreciation?
Well, it goes back to really the old luxury vehicle rules, but basically if you use an asset less than 50% for business purpose, the depreciation is quite different. You have to use a longer period. Mm-hmm. It would not be eligible for bonus. And it's very important to document your business use, because the burden of proof is always on the taxpayer. And obviously flight logs and accounting records are generally required anyway for planes. So it's very easy to document the use, but it is very important to make sure you exceed that 50% rule. Otherwise, you may not be eligible for the bonus depreciation.
Yeah, and as far as documentation is concerned, I mean, Sporty's has this little flight log. If you want to be old school and have a flight log in your plane with a pen, you can do it that way. And I think ForeFlight even has an option where you can tag some of those flights as business or personal. So those of you that have the electronic flight bags that are fairly savvy, you can also use that to help generate reports. But the important key is, if you ever do get in an audit, to make sure that you do have those trips documented and you can clearly identify what's business and what's pleasure. So if they do use some pleasure flights, there is some tax ramifications from that standpoint, right? They do have to pay a little bit on that.
Exactly. There are rules and guidelines as far as determining the value of that personal use. Generally, if you're in a pass-through entity or a corporate entity, as long as you're reporting some of that personal use to employees or executives, you still can use the plane as 100% business use. They're just going to have to pick up income either on their W-2 or 1099 from their employer, or as an owner, you basically could have some income as well from that.
Okay, perfect. All right, and then we'll bounce this one to Tate. I think we covered this just a little bit, but just if you want to reiterate again, from a buyer's perspective, if you could kind of go through the sense of urgency from the, explain the timeline to us. Okay, so it's now September 25th. I need a CJ, but I don't have to do anything until later. I've got all the time in the world. I got till the end of the year. Help me with the mindset of how wrong that is.
So a lot of our customers, especially if you're stepping up from the piston world, we can do a piston transaction in 2 to 3 weeks. Now, getting into Q4, that gets a little tight because shops get busy. But in the turbine world, that is not the case. If we're procuring an aircraft, it takes 6 to 8 weeks to find the ideal airplane, and then 3 to 4 weeks to get an inspection and closing done after that. So, we're looking at 9 to 12 weeks from start to finish of that transaction. So, we're sitting here September 25th. You're looking for a CJ. We need to hit the ground running now. Otherwise, you're going to be more in a reactive place in the market, right? And you're just going to have to go buy one that is available, as opposed to shopping around, finding the right aircraft for your needs that meets all your requirements, because you don't want to be in that position where you compromise and just buy something because you have to. So if you want to find the ideal aircraft, you want to make sure it's a good fit, checks all the boxes for you, now is the time, because we are running out of time. I know a lot of people think, oh, we've got 12 weeks, we've got a whole quarter, and that's not the case. We need to be shopping now and hit the ground running. So
it sounds like you're going to have a very busy October.
We've already had a very busy September. Like I said, just closed the King Air B200, and we've got a lot of other deals working. So it's going to be a very busy Q4.
Okay.
And I would like to circle back to Lewis and just throw one more question back at you. I get this question a lot, and it seems to not be as black and white. So a lot of customers ask me what justifies business use of an airplane. So could you just give some examples of, possible trips that would be considered business use in the eyes of the IRS?
That's a great question. There's also an add-on to that question. The rule is it has to be ordinary and for business use, ordinary, customary in their industry. But typically, a business use, as long as that trip is for your business or there's a business purpose for that trip, it should qualify. For example, if I'm a doctor and I have various hospitals across the country or across a region, if I fly from my home to another hospital, that would be a business use. Obviously, I'm conducting my trade or business at that facility. We even had an example of a gentleman in a lumber company that had a plane, and basically one of his primary purposes for that plane was to fly over other competitor law mill. And basically what he could determine is kind of what products were being developed, and again we go back to supply and demand, and which products were not. So if he noticed 2x4s were not being produced, he knew there would be a shortage in that. So basically he was using it for business purposes.
I remember that customer. We sold him his Cirrus. Yep, I know exactly who you're talking about. Yeah. So it was a fascinating play. I was like, you're buying the plane for what? He's like, I want to see what my competitors are doing. So yeah, that's definitely a good business use. Okay. And then obviously in construction, right? If we're in construction job sites, I know several guys that we've sold King Airs to, and they'll move crews. So if they've got specialized general contractors that they need to get from point A to point B, that would be ordinary. I know we've got a rather large construction company here in Lexington, Kentucky that has King Air 350, and I think they also have use of a Challenger because they do huge projects, bridges and everything else. So those would be some good examples. All right. So, Irv, we kind of kept you quiet over there a little bit. So from a buyer's perspective on your side of the house, you've worked with high net worth buyers in the years, the luxury car brand, Mercedes. So what do you see as a common thread in how they approach major purchases, and how has that return of 100% bonus depreciation helped on the piston market?
Yeah, so when you look at it, luxury sales in high net worth individuals, they often will lean on their trusted advisors, people that they know can advise them and push them in the right direction towards their purchase. Kind of like what Tate mentioned, when I spent my time at Mercedes-Benz, when you started coming into the year end and people are looking for bonus depreciation or Section 179, you kind of get stuck if it's December 20th and you're looking to buy a GLE or a G-Wagon or something like that because of the weight of the vehicle. You're stuck with what's available. So you're probably not going to get the one with the equipment you're looking for, maybe the color combination, or maybe you get lucky and there is the right one. But time was not of the essence, especially when you're getting into closing out that calendar year. And more importantly, when you have a high net worth individual, they're going to look at what fits their mission and what it's going to be to expose them the least amount from a financial standpoint. So that's why they have these advantages that they take into consideration pretty heavy. So it weighs into it when people are making that decision, especially a high net worth individual, as opposed to just being a purely transactional standpoint. Yes, I'm going to buy X for, whatever amount of dollars. What additional benefits do they get from that purchase, as opposed to just being, an acquisition from them?
So let's also talk about sellers' perspectives, because that's also a key point that I think people don't really take into consideration. So we've talked about this from a buyer's perspective pretty well, but from a seller's perspective, so Tate, I would think that from that standpoint, the sense of urgency would also apply to a seller, because a seller, if they're looking to maximize the value of their airplane to move into another aircraft, now would be a good time for them to hurry up and list their airplane with you. Would you agree?
Absolutely. And even if you're looking to sell it and get out because your mission's changed, or you want to sell it and move up to a bigger airplane, nobody wants to give their airplane away, right? Every seller wants to get the most they can for it. So if you're selling outright, Q4 is a great time to do it because you're going to get the most for the airplane. If you're moving up, obviously you want to get that delta between your current aircraft and your next aircraft as low as possible, right? Or maybe you only have X amount of dollars to work with there, so you want to get as much as you can on the second airplane, so you want to maximize the value of what you have to work with. So absolutely, Q4, if you're a seller, now's the time to also get that aircraft on the market, because like we laid out on those time frames of buying an airplane, that also applies to selling an airplane. So you don't want to list it at Thanksgiving and think you're going to sell it before year end.
Yep.
You want to get it on the market now so you get those qualified buyers, because we have seen in years past, a lot of people do their tax planning in advance. So some of those most qualified buyers, they might have been through this game before, so they're not going to wait until December 15th to buy an airplane. They're going to buy one in October and November. So you want to have your airplane out there so they can see it, and you can have it in front of them and potentially sell it to them before year end.
What a market. Great time to buy, great time to sell. I mean, that makes a great market.
Yeah.
Oh, yeah.
Doesn't it?
Aviation's alive and well, and we see that every single day. Go to the local airport, and it's going to be busy.
Absolutely. Okay. I also had an interesting situation occur with another customer. So he looked at it from a standpoint of wanting to sell this year because he had some pretty significant losses in his car business. So Lewis, this gentleman, for example, he had about $3 million in losses, and he had fully depreciated his $3 million jet. So what do you think about that as a good time for him to sell? I mean, is that another reason, if you've got some losses, now would be a good time to accept that kind of gain because you've got an offsetting situation to sell there?
Most definitely, because basically if you're sitting with a loss, it's going to be carried forward. And operating losses, net operating losses carried forward, you can only offset 80% of the income for that year. So that's kind of like selling stocks. A lot of times you have losses in your portfolio and you harvest gains to offset that to get basically a neutral zero tax position. So yeah, most definitely if you have losses, that's probably going to be more of an incentive to sell now.
Yep.
If it's a gain with no losses to offset, your sellers may want to say, I want to sell in January,
Yeah.
Yep.
and at least get a deferral of another year. So it's kind of one of those damned if you do and damned if you don't. But there's a lot of opportunities, but that's a great point. If you definitely have some losses to offset, that would be a way to accomplish a zero neutral tax position.
So just to kind of track that math, make sure I'm catching what you put out there. So this gentleman lost $3 million. He's got a $3 million jet. If he sells it this year, he's going to be able to take that $3 million gain and offset that $3 million loss. But if he had just carried it forward, he would only carry 80% forward. So this way he's going to be able to get 100% of that loss. So he picks up another 20%, say another $600,000. Is that true, or am I stretching a little?
I think we need you to come work for us, Dan. Might be stretching that just a tad. You don't lose the 20%. Basically, the full 100% net operating loss carries forward. For example, in that following year, if I had $100,000 of income, I could only use $80,000 of that loss.
Got it.
And then the remaining loss still carries forward.
Okay.
So you don't get to that zero neutral position, but whereas in your previous example, you would if you sold the plane in the same year as the loss. So you're getting probably a better present value calculation of tax.
Picking up another $600K. So
Exactly.
That's what I call making
Exactly.
lemonade out of lemons, baby. That's what that's what that is. All right. So yeah. So I mean, even if you've had a bad year, and I mean that's a great time to sell a plane, right? You've had a bad year, things are challenging. That's the other great part about this, because in the bonus depreciation scenario, people always think, oh, I got the recapture. But the reality is you take advantage of it this year. If you have a bad year in your business, you're going to be able to kind of counteract those losses with that gain from that aircraft purchase. So that's the best time you'd want to sell, because your company's losing money. You're going to go ahead and sell in that time. So kind of a win-win all the way around.
Exactly.
Yep, because you definitely don't want to sell it next year if you make $3 million and now your tax liability is $6 million.
Yeah.
Exactly. So, so many ways this can benefit you as an aircraft owner. You just got to be able to look and understand and evaluate what's going to be best for your specific tax situation. But a lot of benefits, and that's why they've done it. So it's very beneficial to the business owners. So good play. All right, well, let's continue on, and we'll get into the numbers. So let's put this into perspective. As far as we went through kind of the loss scenario, so let's talk about how it can help from a gain scenario, right? Let's talk about where most people are in a situation where people have had a good year, and how it can benefit them from a good year, because that is the camp that most folks are currently in. So, Lewis, if you could explain to us the immediate impact on cash flow in contrast with the phase down in the prior years. So, kind of go through that for us as far as the bonus depreciation.
Well, let's just use an example. For example, if we had a plane that we were purchasing for, let's say, $500,000, $500,000, under the new bonus rules, I'm going to be able to deduct that full $500,000. Now, depending on what type of entity you may have, because you have C corps, which are in a 21% flat tax rate. And then individual rates, the maximum rate is 37%. To further complicate it a little bit, you have this thing called QBI for pass-through entities and individuals. It's a 20% deduction, kind of a paper deduction. So for my example, I'm going to give you a range, whether you're a C Corp, and then we'll use about 30% for an individual, which should take into account the QBI deduction. So you would get a tax savings from that $500,000 of anywhere from 21% of 500 is approximately 100,000, or 30% 150,000. So that's going to save you somewhere between 100 to 150,000 in hard tax dollars.
Real cash money.
Real cash money, and obviously that's going to put money in your pocket to let you afford that plane. So this may be the ideal time to buy a little bit bigger plane, maybe a plane with great avionics on it, or even a larger plane, which you will see big corporations, the FedExes of the world or the Microsofts. Most of the big corporate giants have Lear jets in their system, and they'll probably be looking at this from a tax planning opportunity as well. But for mid-sized to small businesses, the 100% bonus depreciation is a truly economic benefit, win-win for both the economy as well as businesses. And we're already seeing it across several industries. And you guys are kind of hinting that your business is really starting to pick up as well. This bonus depreciation is creating a lot of stir out there in the market.
Yeah, I know the OEMs, manufacturers absolutely love it. It definitely helps them to continue to move through those products, which is jobs, right? I mean, it takes the great thing about the aircraft is it's handmade. So all those airplanes are handmade, and they help to propel those factory jobs, highly trained jobs throughout the country. So out in Wichita, where Textron's based, so very good thing. Tate, to you, when you match these tax savings against market pricing, which jet categories stand out as specifically attractive right now? So what markets are you seeing that are fairly attractive?
Yeah, I'll include turboprops in that as well. And,
Great.
Like Lewis mentioned, the small to medium-sized businesses, the most attractive aircraft, in my experience, for them are going to be your bread and butter. Turboprops, Meridians, TBMs, PC-12s, King Airs are obviously workhorses. And then looking into the jets, the light to medium-sized jets. So Citation Mustangs, Citation 525, that whole series, Phenom 100, Phenom 300. Those are all very popular jet categories these days that are in a very sweet spot price point wise for those small to medium sized businesses to really take advantage of the tax savings.
Excellent. All right. Irv, when your sales teams puts these numbers in front of buyers, what reactions do they get from those customers?
We present a lot of figures every day to our clients, and I think initially you see a strong interest in it. It pivots back towards what their mission is going to be on the aircraft and making sure it's going to fit them. And then the question doesn't necessarily pertain to if I should buy it, but it should be when and how I purchase it. The interest in it obviously is there. People do a lot of research online first, and then once we're starting engaging with our client with those conversations, getting the numbers in front of them, of course, you can actually see it tangibly, how it's going to benefit you, and then make sure it's actually still going to fit that mission. And then the question again isn't whether, should I do this, but it's a matter of when and how I do this.
Okay, so it's kind of secondary. So bonus depreciation kind of plays into a secondary role. It's primarily the mission, and then secondary bonus depreciation, the tax savings.
Of course, yeah, and how they're going to acquire the aircraft that's best going to fit them. Not again from just an acquisition standpoint, like buying an airplane, but what other benefits come with that.
Okay. And I'm sure, do you get some customers that call in and say, hey, I've heard about bonus depreciation. I want to buy an airplane. What should I buy?
Absolutely.
Flip-flop.
Again, the bulk of it, conversations are starting with, the aircraft and what their mission is. But there are definitely those cases of, hey, I've got this liability, what do I need to do? And then that's where we come in as experts and guide them towards, okay, how are you going to be using it?
Yep.
Sometimes it's a first time for their small business. They're buying a plane that they definitely see a use and a need for. For example, we had a client that's out of Texas, and they have a construction company, and right now they're busing their crew everywhere. And that is taking lengthy times on their jobs, and then equipment, and then, of course, the quality of those, workers when they get to the job site. They've just spent 6, 8, 10, 12 hours in a vehicle. They're already burnt. So you're already losing days and times where, you can get them in a turboprop or a jet or, something along those lines and get them there within, a whole lot shorter amount of time. They're rested and you gain back that time. So there's multiple benefits that you don't necessarily see initially. It's unrealized gains that you get, and when you're looking at high net worth individuals and business owners, they value speed, convenience, and consistency. And when you have ability to have that aircraft and put that in your fleet and use it towards your business, it's a no-brainer.
And back to the point that you said, time, right? Time,
Oh, yeah.
Time is money, right? We cannot manufacture time, and airplanes are like time machines, is what I call them. So they manufacture time. If it takes you 5 hours to drive and you can fly it in an hour, you just manufactured 4 hours. So
100%.
it's the only way that I know to manufacture time. Tate?
And the amount of customers I have that, like you said, they buy the airplane for one mission because it's justified enough, but the airplane's sitting there in the hangar, so they have a need or a meeting in, let's say, Charlotte, and now that they have an airplane, they take that meeting where otherwise they wouldn't have.
Oh,
and the amount of customers I have that just are blown away at how much business the airplane actually brings them that they weren't expecting, because now they can get to Charlotte and back before lunch, and they'll take a meeting where otherwise they would have been too busy. They wouldn't take it. Maybe they didn't get that contract previously, but now the aircraft at their disposal just opens up a whole different world that they didn't know was possible.
Yeah, face-to-face meetings are so important to be able to expand and grow your business. Because even if that meeting doesn't yield something for your business directly, you always learn something. And you figure out, hey, this didn't work out, but enabled me to be able to do X, Y, and Z. So, yeah, that belly-to-belly, being able to meet face-to-face to people is so critical. And the airplane definitely does that, brings that mission out.
And on the flip side of that as well, I mean, the people that are taking those meetings in Charlotte, flying commercial nowadays has absolutely.
Has anybody been through Charlotte Airport recently?
I don't know if I got stuck in Atlanta the last time I flew commercial. So, at the end of the day, there are the business owners that are seeing, okay, I need to take this meeting in, Miami, and they're going to fly commercial, and then they got to lay over at this place, and you got to get to the airport a couple hours early. It's a nightmare. So when you have access to that tool, more than anything, it is a tool for your business needs. Walking onto a private aircraft, departing immediately, getting to where you need to go direct, it is a time machine.
All right, so let's talk about from planning to purchase. So we've kind of touched on a few of these things as far as, hey, you really got to think about it. Timing is a very, very important key. So Lewis, if you could kind of chime in here, at what point should a buyer bring in their CPA into the process, and how does that financing fit into their tax strategy? So if you can kind of go through some of those pieces, that would be great.
Well, I think it's a good point that you're bringing up, because every taxpayer is different and have many different circumstances, many different business entities. So their CPA or their tax professional really needs to get involved very early in this process. And some probably have already been involved, because some of our clients will sit down at the beginning of the year with a strategy, but it's all dependent on how the business earns money during the year, and a lot of businesses are having very good years. So now we're getting calls, okay, we've got too much income. And
Love those problems.
Yeah, definitely do.
Yeah.
So you're going to see a lot of people probably getting with their tax advisors, probably Q3, at the end of Q3, beginning of Q4, because they've got pretty good numbers now and can probably project out. So I think that's the key: get the tax professional involved quickly. The other thing you bring out, financing, you don't have to pay cash for these planes to depreciate them.
No.
You can finance them. So the main thing is that it has to be placed in service. So that title to that plane needs to be in your business or your name before December 31st. Otherwise, you don't own the plane. You're not going to be able to depreciate it. So time is definitely very, very important as far as getting this done if you want the tax deduction this year.
Okay. Well, that brings up a great point. Back to you, Irv, as far as, so Irv, you're also the sales manager for AGL, the financing arm of things. So since you oversee both of those, how does the financing, and there's another timing component. So we've talked about the purchase and how long it takes to get a purchase. What about the financing? Should they also have a sense of urgency as far as applying for financing for that aircraft?
Absolutely. I mean, when you look at it, and you let's say that same example of the $500,000 aircraft with somebody that has a liability of $500,000, sure, they might have the cash to go ahead and purchase that aircraft, but really, when you have a high net worth individual, a lot of things that are in common is they want to leverage how much their exposure is. So when you can finance it and still take advantage of that 100% bonus depreciation, you're keeping that cash in your cash flow, and you're able to use that for other investments. The thing about that that we've already talked about, especially on the jet side and the turbine side, those pre-buys take a lot longer. On the piston side, a little bit more availability, but you're still talking 3 to 4 weeks to acquire the plane, and then go through the pre-buy. You're still looking at a couple weeks, so 6 to 8 weeks on that side for the piston world. And then if you throw financing in there, these banks go through full underwriting. It's essentially kind of like a commercial loan. So, you're looking at a couple weeks potentially to go ahead and have all that done. So you're going to have to get 2 years of your documents, all your K-1s, all your personal financial statements. All of that has to be, acquired to us when we go into our underwriting side. So it, if looking at it and going, hey, I might pay cash or I might finance it, and you don't know that answer yet, even if the possibility of going, I might finance it, still take the bonus depreciation. I mean, we just saw a 0.25% drop in the feds on the rates. So, I mean, financing right now, it's definitely, personally, from my standpoint, I would rather finance it and take the 100% bonus depreciation, do 15 or 20% down, and then leverage my cash for other investments.
Yeah, because we've seen that in the past before, haven't we? People will think, oh, I'm going to finance it, and they wait to the last minute. So even the banks, just like the mechanic shops, just like the maintenance shops, they get backed up as well. So again, that sense of urgency, get it all in there. When anytime you're having a massive amount of business moving forward, anything you can do to get in front of that, the better off you're going to be. Okay.
Yeah.
Well, that sounds very good.
Also, it puts you in such a better negotiating position as well. So
yes.
I advise all my clients, if we're going out and shopping for, a King Air 200 or a PC12 or a Phenom 300, if you're financing it, we need an approval and we need $100,000 in escrow. So when I come to the seller and we negotiate this deal, they know that we're serious and we can prove it to them. So makes you a lot more powerful of a negotiating tool whenever you have those things done already.
Well, that's a perfect segue into the next question for you is what does AlphaJets do to help prepare the buyer for an airplane? So that's good. That's part of the process. You lead right into that. You want to further expand on that?
Yeah, it's a long process, so we can't cover it all on this podcast, but it's a very tailored, personalized approach. So we sit down with the clients and we say basically, what's your mission, what are your needs, and then what are your wants? There's a lot of airplanes that go from point A to point B, right? But they do that very differently. And what they are capable of doing is also very different, even though they all go from point A to point B. So we look down, or we sit down and we look at what do you want to accomplish, who are you taking, and then we'll tailor that approach and go find an aircraft and put a game plan together based on that.
Okay, excellent. So I think we've covered a lot of ground with the bonus depreciation. I think we've all come up with some really good points and highlights. Obviously, number one, time is of the essence, right? So a sense of urgency. There's not a lot of time to waste as we are going to be in Q4 in literally a week.
Yeah.
So we're 5 days from being into Q4. So time is of the essence. So we need to get that on the rolling. So at Airmarts and AlphaJets and AGL, we work together to streamline that whole process. We have all of these entities together, both from the piston world, from the jet world, from the financing world, to help you to get that aircraft. So if buying a plane this year is on your agenda, now is the time. So I just can't reiterate enough how much you need to be on this now. It is Q4. Time is of the essence. We're 5 days away from it. Need to be starting the process. So in closing, Lewis, is there anything else that you might want to add or any other little last closing bits you want to let the listeners know?
Well, the interest on that finance is a tax deduction as well.
There you go.
So,
Another key point. Excellent. Okay.
But the bonus depreciation is a truly business benefit. It's definitely pro-business, and people should definitely take advantage of it.
Tate, anything you want to let our listeners know from the AlphaJet's perspective?
Time is of the essence. So if you want to do something in the tax year 2025, you need to be doing it now.
Excellent. Irv?
Yeah, I mean, hate to be that broken record, but time right now, especially going, we're 5 days away, we're a week away from going in towards Q4. So, with Airmart, AlphaJets, and AGL, we have all those tools to help speed that process up. Pre-buy shops, we have our own ACE inspection, we have all of those things. Right now we have 104 planes available to us that we're listing and selling that we own. So, that is a great position going into Q4. But as we go down that hole of, well, we're now November 20th. It's after Thanksgiving. What am I going to do? Inventory becomes tight. Sellers also know that, hey, this person is trying to get that bonus depreciation, so your leverage is for negotiation. You have to be making those decisions, now. And like Lewis said, I mean, people have already got with their CPAs kind of positioned them to where they know, okay, I can predict by the end of the year this is where I'm going to be. This is what I'm going to need to do. So unlike, you're not unique in that space. Everybody is having those conversations right now with their accountants and their CPAs. So, if that becomes something of topic of discussion, give us a call. Help us advise you as far as what to expect and how to accomplish that.
Yeah, and it sounds like the Q3 planners that have already met have already purchased.
Oh, yes.
So
yeah, no, it's
they're already there.
The people, again, being retroactive, they kind of got that unique advantage where it was, okay, cool. Well, hey, I got this added benefit, right? Yep. But, the Q3 people got the jump on it and already properly planned, had their pick of anything on the market that was out there. So we've already started to see them rapidly speed up. I think between tomorrow, Monday, and Tuesday, we've got 20 planes to close and under contract. So it is that we
20 left in 5 days for September. Yeah. All right. So time is of the essence, folks. As we wrap up here, we're all very thankful for the bonus depreciation and how it exists and how it helps everyone, both as we've learned in this meeting, in this podcast. It helps both the buyer, the seller. It covers all situations where everyone can benefit. So it's truly a win-win situation. So I'm Grant Sutherland, and I want to thank everyone for listening and joining us on this podcast on Approach. And we look forward to joining you again in the future. Thank you.
Yeah, thanks for having me.
Thanks for listening to another one.
Thank you for tuning in to On Approach, your go-to podcast for expert insights in general aviation. Join us next time for another smooth descent into the exciting realm of On Approach, proudly brought to you by Airmart. Visit airmart.com to learn more.